Hi everyone. More people than ever are asking Google, will the housing market crash? According to Inman review of Google Trends data, more people are nervous about the marketing time that they are scouring the internet for housing crash information to find the answers. And the answer is we are seeing a leveling of the playing field, but the game is still on, folks. There's no need to worry. If you own Raleigh real estate, Cary real estate, Holly Springs real estate, or anywhere else in this mega triangle market, your real estate investment is not depreciating. Your home is still appreciating. So in Raleigh and in our Cary real estate market, we've seen our housing appreciate a whopping 42% over the last 12 months. And that is just plain unattainable, thankfully so, or nobody would be able to buy a home. However, Triangle Real Estate is one of the most popular cities, so the demand for homes continues to rise. However, the rise in the search term suggests that homeowners are increasingly nervous about whether they should sell their homes. People want to predict the future, and that is a difficult task for all of us. So what's next in housing? Well, I'm going to give you the facts for you to make up your own mind about answering the question for yourself. A crash, a huge bubble, did hit Triangle housing in 2008, and I was here. I want to tell you, I felt it, as well as throughout the rest of the United States. Housing values went down about 20%, but that's very different from today's real estate. In 2008, mortgages are much harder to obtain than they were in 2008. The saying in 2008 was it's harder not to get a loan than it was to get a loan. There's increased regulation right now, tighter lending procedures that have raised lending standards to a really highly qualified buyers with a significantly lower chance of default. So today's saying is more likely to be only the people who don't need a loan can get a loan easily. So the second reason why there is no crash, I'm going to show you chart A, is to tell you that inventory levels. We are down from inventory from the years that we were above inventory levels, and chart A shows you that we have been continuously down or level with inventory levels since 2020. So we're below inventory levels needed in 21 and again so far in 22. So you get inventory from three different sources. One is new construction, the other is resale homes, and the last is distressed property. So let's break down each one of these. So when you talk about new construction, I want you to look at chart B, because chart B shows you that for 14 straight years, builders are holding tight reins on their building, and they're unable to keep up with the demand of the millennial generation, the first-time home buyers. Let me show you that on chart C. Chart C shows you that the population by generation is at its peak for the next 3 years. Actually, millennials are buying homes at age 32 is the magic number for a millennial to buy a home. Boomers bought our homes at age 27, so you millennials are a little bit behind, but it's a good thing. But the inventory is not keeping up with that first-time home buyer demand from the millennial market. And that's not going to lessen because millennials are going to have peak home buying years all the way up until about 34 years old. So we've got 3 years at least of high activity in the millennial generation of buying their first home. So nationally, we have a 3-month supply, and 6-month supply indicates a balanced market. I don't know when the last time we ever saw a 6-month supply. In Raleigh and Cary real estate, we have only 2 months supply of homes to sell until you get to a very, very high price range. So there's breaking news. You won't hear in the headlines. We are still firmly planted in a homeowners selling housing market. So it's a strong seller's market. Distressed properties, I'll show you this on chart D. Distressed properties have worked out the ways with their lenders on repayment. In the entire United States, you'll see on this chart D, it shows you that from the high years that we were in 2008 downturn, we have steadily gone down on the number of distressed properties in the United States. And if you look at Chart E, it tells you the reason that we don't have as many distressed properties is because they are working these things out with their lenders. People that were behind, people that had forbearance during COVID, 29% of them have deferred their loan. They have worked it out with their lender. 45% of it worked out a repayment plan. We don't have but 400 homes all the way across the United States that are considered in distressed properties. And if all 400 of these homes came on the market right now, demand would easily absorb them with the current buyers that are hungry for homes to see. So with all the negative headlines, it may seem hard to believe that housing holds its value. Even in rising interest rates have not changed the fact that housing continues to appreciate, although it's at a lower level of 10%, which is higher that's been the norm for me in 30 years of real estate. So as the Fed works to stem inflation by raising interest rates, we know that the past recessions, with the exception of the 2008, history shows us that mortgage rates fall during a recession. So we all need to remember that the media is going to train your brain to think and believe the worst in any situation. And in fact, now is still the time to sell your home for a profit. When you live in an area such as Raleigh and Cary and the surrounding cities where the demand is high, there are people relocating to our area in search of jobs and better priced living. And the Triangle has always been ranked as on the charts as one of the best places to live in the United States. So the better question for you to ask is, what is your motivation to possibly sell your home? Are you wanting to be near family or friends? Do you feel the need to downsize and free up space in your life? Are you ready to enjoy a different part of the world? Do you need access to the equity in your home for retirement? At the end of the day, there's no magic ball, but we can take our best educated guess at the future and advise with experience what would be the best option for you. I'll end up with the thing we know for sure. Inflation is the enemy of long-term interest rates. But when inflation is stemmed, the Fed uses lower interest rates to stimulate the economy. So here's the phrase I want you to remember. Date the rate and marry the house you want to buy is a smart move in today's housing markets. So get in touch with us. Let us know how we can help you make a great move in our current market. Take care.